All right, everyone, how's it going? Hope you had a good weekend. I'm going to quickly touch on my weekly expectation for the Nasdaq, the S&P, and the dollar, and then also review what I'm looking for going into this week's news folder events, our red folder news. So let's touch right on what we expect the weekly candle to do. So we'll start on a blank chart. I have some levels annotated on other charts here, which I'll talk about, but let's start quickly with this blank weekly chart. What we want to see is that last week, we formed a down close candle that took out the buy side of the previous week, right? So this is our buy stops of the previous week and closed back within the range. So if you guys have seen my daily bias lecture, you now know that if we can treat this weekly candle like a daily candle, we can now look to see if the bottom part of this candle, i.e. the sell side of this weekly wick, can be engaged. So we'll mark that out, right? And this comes from the idea of wicking above the previous week high and failing to close above it. And therefore, we want to see if price wants to reach down into the previous week low. Now, an additional confluence we have, in addition to this candle body closure last week, is this large sweeping wick, right? And this small internal range of liquidity on the weekly chart. This is our buy side imbalance, sell side inefficiency on the weekly chart, which adds an external confluence and an extra draw on liquidity for that weekly chart. These are the kind of levels I'm looking for on my weekly chart on the NASDAQ. Now let's zoom down into the daily time frame and see what we're looking at. So as you can see, last week was definitely interesting. We had our Thursday reversal, or our consolidation reversal profile in the market with CPI on Thursday. And then we came back into the range actually on Friday with PPI. So if we actually break down how this weekly candle last week was formed, right? So this is going to be previous week high that we swept, right? And this is going to be now this low of last week. So this was 2 weeks ago, previous high on the Friday the 5th. And now this is our low from last Friday. Let's actually look at how this previous week candle printed. So as you can see, our weekly open, which was Monday, actually had very little. So this is our open. This weekly open had very little manipulation below, right? When we had this daily imbalance that was created. And then we traded higher on Tuesday, higher on Wednesday, creating a series of consolidated lows, right? The ones we saw in here, for example, and in here. And if you were in my server last week, you know that we traded this Thursday reversal on CPI because that was the obvious expectation given how the weekly candle was printing at the moment, right? We had yet to manipulate below this weekly open, and then we traded higher, leaving these consolidated lows. On Thursday, then, you can see that if we look and also employ a 3-day look back, right? So this is Thursday. Well, we can just do it like this, right? This was the Wednesday, Tuesday, Monday. Okay, so these were the days leading in to that third day, which was Thursday, which is our reversal day. And you can see I have my day separators here. And we had this very nice draw on liquidity below this weekly open. You can see that price came in, swept out this liquidity, which is going to be our first day look back. So this could be day 1. This here can be day 2. And this here can be day 3, right? So this is the idea of using IPDA lookbacks and a 3-day look back when considering the daily liquidity objectives. As price traded in below all 3 previous days look back and actually came into this pool of sell side liquidity, which was also a daily fair value gap, which we can see right in here. Price then returned back into the range on Friday, and very interestingly enough, in addition to coming back into the range on Friday, let me just drag this back to the low here, we also formed an SMT with the ES at the CPI data highs. So in here, we had the S&P 500 coming up and taking out this high, liquidating it, as you can see on this chart right here. And we had NASDAQ failing to actually come in and take that high, as you can see here. So that was a very interesting divergence we saw at the end of last week or last Friday on PPI. Now, interestingly, you can see that price came back in to this hourly order block, or the change in state of delivery area, whatever words or whatever term you want to use. And you can see that price rejected that and moved lower. So now if we consider this week, right, and where we think price is likely to draw in, we have a couple of confluences. We have not only the fact that we've had this previous weekly low, which we talked about in terms of the last week's candle body closure, but we also have this SMT that formed at the previous day high on Friday. So we have an internal range of liquidity here. We have this sell side liquidity objective, and we have a high resistance run on the ES and an SMT that may signal reversal. So we had expansion lower, accumulation, manipulation, distribution higher, and we formed an SMT, and now we may work our way back down before moving higher. So what I'm looking for this week is to engage this sell side liquidity pool on NASDAQ and then form potentially a bi-week higher back into this previous week high. So that would look like sweeping this low and then targeting this high, right? That's what the weekly candle should look like in my opinion. And I would like to see NASDAQ lead the charge per se lower given its relative weakness on Friday's close. As you can see, ES is still trading above this hourly premium sell side imbalance, buy side inefficiency. So we can mark out both of these now on our hourly charts. And NASDAQ rejected this hourly sell side imbalance, buy side inefficiency, as well as failing to take the previous day high. So I'm looking for relative weakness on the NASDAQ, as we saw last week, with it sweeping out this low before the ES did. And then I'm looking for potentially higher prices after, right, we sweep out that previous weekly low. If we zoom out, we can say that we want to see something from the weekly candle that looks like this. If we are assuming we might get a bullish candle, we want to see something that looks like this potentially, where we come in, right? Draw this out. And we open on, for example, Monday, trade lower below the sell side liquidity, then form the buy side of the curve and target, right, the stop losses that are created on this leg lower. And we'd also like to see if we can see an SMT down here with the ES. We want the ES to have relative strength. So maybe the ES trades into this inefficiency and NASDAQ trades lower into perhaps this consolidation, right, with a daily fair value gap that rests below it. And as you can see, right, that daily consolidation that we see right there also has a daily fair value gap immediately above it right here. So what I can do is I can copy that imbalance in as well to this view so we understand what we're looking for. We're looking for an open, low, high, close, potentially weak. So now the next question we have to ask ourselves is if we are expecting a move lower than higher potentially, or higher than lower, we'll see. We'll have to see how the weekly candle and the first few days, especially Monday and Tuesday print. What does the economic calendar say? And when are we going to get the most volatility in the market? So if we hop to our economic calendar, there's lots of events in here, and we really care about the high impact ones. So as you can see, tomorrow we have Empire State Manufacturing Index at 8:30, and we also have Powell speaking at noon, 12:30. On Tuesday, right, we have our retail sales. And then on Wednesday, we don't have any high impact red folder news that I would care about, right? These are all lower impact news. Thursday, we have jobless claims, which is going to be definitely a large market mover, a red folder high impact news. And then on Friday, of course, we have nothing. So we have Monday, Tuesday, and Thursday with interesting folders of news that we can consider. So potentially we could form a classic buy week where tomorrow comes in and sweeps out our low, and then we see bullish prices for the rest of the week. We could also see something like we did last week, where we have some sort of Thursday reversal, right, with that news event. But we're going to be considering how tomorrow prints with that high impact news to give us an understanding of where price is going to go for the week. But right now, my expectation is lower than higher, and I want NASDAQ to form some sort of SMT divergence and target potentially even as low as this sell side liquidity or this original consolidation on our hourly chart, right, which rests above this daily fair value gap. But at the very least, I want to see this previous weekly low engage on the NASDAQ before I look for higher prices. So if I want to be a bull, I want to see that liquidity pool engaged first. Okay, so that's my kind of top-down view on the indices, the ES and the NASDAQ. Those are the two primary indices I trade. don't really engage the YM too much. Now let's look at dollar. And what we want to see ideally is an inverse trend, right? Ideally, we'll see that negative correlation between the dollar and the indices, which would be considered risk off. So as you can see, the dollar made an aggressive move lower on Thursday and Friday off the CPI and PPI numbers through this daily BISI. So this daily fair value gap in here, all right, was inverted and now we may expect it to act as some form of a resistance. Now the draw on liquidity therefore becomes this sell side liquidity and also this lower failure swing in the market, this sell side liquidity. So our weekly perspective is really to come into this week's low and this week's low and trade into, again, this weekly internal range of liquidity on the dollar. So the fact that we are seeing a similar, negative correlation with the dollar is a good sign, because that means that we have risk off conditions for longs, right, on the indices, insofar as, it delivers how we expect, with the dollar chart trading lower into this weekly range. So on the daily chart, what does that look like? Well, I will now can see we have this inversion fair value gap overlapping this premium dealing range CIVI on the daily chart, right? This is a sell side imbalance, buy side inefficiency. So what I'm looking for, and really what I'm considering, is this leg, right? And I want to see if price can reach up into, let me move this over so we can see. I want to see if price can reach up into this premium CIVI, or this premium array of the market, up here. So this is going to be essentially what I'm looking for on the dollar, which is exactly inverse to the indices, where I want to see the dollar trade higher than lower, and I want to see the indices trade lower than higher. So this expectation is considered risk off because we have that natural inverse relationship between the two. So that's what I'm looking for this week on the indices. I'm going to be trading the following days. Monday I will trade because there's high impact news. I will also trade Tuesday, we have high impact news, and Thursday, right? So Monday is going to tell us a lot of information about whether the manipulation of the week has already occurred yet, as will Tuesday. And my general idea is going to be trading long off of my bullish key levels right here and targeting the other side of the range. Now, alternatively, if we get a week that opens, right, higher, I will be looking for potentially another SMT at the highs and then to trade lower. So whatever way the weekly candle opens, I will look to trade the opposite direction, and I will expect that first move to be some form of manipulation. Likewise on the dollar. If the dollar trades lower to begin the week, such as tomorrow we come into our sell side liquidity, then I will expect the dollar to retrace higher into this premium inefficiency and perhaps this liquidity, right, later on in the week, which would fit the thesis of, this profile, a reversal in the market lower later on in the week. So really tomorrow will tell me a lot of information about price, as will Tuesday. And once we have that weekly candle direction, I will know whether to trade away bullish from this original consolidation or trade towards, right, bearish towards this consolidation in the market. Again, if I'm looking to long, I will be looking to long probably the stronger asset, in this case, the ES, looking for a bullish divergence. And if I'm looking to short, I will be looking to short the weaker asset, in this case, NASDAQ, looking for some sort of bearish divergence like we had on Friday. So I hope that was clear. If you have any questions, put them in the comments, and let's see how this week prints. Thanks. I'll see you guys soon.